In this video, we're going to take a look at one of the most important questions on my mind, whether or not we're going to have a V-shaped recovery in the equity markets, or we're going to come down, revisit the lows, and possibly break through. What's going on, everyone? This is Jordan with Conquer Trading and Investing. In this video, we're going to look at some interesting charts. We're also going to check out a little bit of the macro view, put together the pieces, and figure out what happens next. Now, I want to give you a little bit of a view of what a V-shaped recovery looks like, as we had one. This is going back into 2018. This is the December. Look over here. Look at the chart. You can actually see this is a V. And that's what a V-shaped recovery looks like. Now, the question right now is that where we're headed right now? Has the response from the central banks, has the response from the governments around the world been enough to send the markets back in basically no time to new all-time highs? Or are we going to come down and revisit these lows and or break down lower? Now, if you look over here, this is the chart in blue of the S&P currently, and you can see it has been the fastest decline in the amount of days. It wound up being so far 23 days. If you look back to the crash of 1987, that took 38 days, or in 1929, that took 40 days. This was 23 days from the high here to the low so far. And where we are right now, let's take a look. I want to really share with you some interesting things to help you make a better decision. Now, the first thing I want you to see is this chart here. This is looking at the crash in 1929 and right now. And you could see that this went on for a few more days. We bottomed out relatively at the same spot. This recovery from here to here, and also I want you to see, if I move my mouse left to the left over here, you could see where this resistance was. We're going to look at that on the S&P in just a moment. This took 5 months, this recovery over here. And I bet everyone over here thought that, well, the markets are recovering. Hopium. The markets are recovering. We're going to new highs, right? And then shortly thereafter, that 5 month peak into this resistance over here on the left. That was it. Markets came back down and eventually not only tested the lows, right? It took quite a while, right? How many months is that? It's more or less. It's 1, 2, 3, 4, 5, 6 months later, all right? Until we retested the lows, and then it was 8, 9, 10. 10 months later, we broke through the bottom, and then we melted down for quite a while, another couple of years. Now, here's what I want you to look at first on this chart of the S&P. I have this thick resistance line over here between 2800 and 2878. The reason I have those lines there is because that's where we will be. If you look back over here, this was the resistance area that price made it all the way up to before rolling over. If we're able to make it up that high, that's an interesting space to lean into. This trend line over here will provide you, along with this upper resistance, where your stop is to get out of that trade. Assuming we make it up that high, it seems like a realistic place to lean in for a short. Now, what else happened? I want you to see, this is the NASDAQ during the dot-com bubble. This is NASDAQ Y2K, year 2000. And you could see a similar, from the NASDAQ now, a similar drop off in the markets, recovery as we're seeing now. Now, this was 1 month. We went on to make new lows and then recovered much higher. We recovered into that area of resistance we were just looking at on the S&P, and you saw back on the Dow during 1929. And from there, again, it was another sell-off, a retest of that high. And then how long did it take for us to take out the lows? It took a total of 10 months during the 1929, 1930 area for us to take out the new lows and then really set it off to the downside. This was different. We'll call this April. So it was June, July, August, September. It was a total of 4 months to take out the lows. Okay, now keep that in mind. Where does that place us? This was 5 months. This was 4 months. in order to go ahead and retest the lows. We are right now bottoming in April, May, June, July, August, September could be a dangerous month. September and October are notoriously dangerous months in the equity markets. Let's watch out for that. Now, this is a different situation, obviously. Why is this a different situation? Before I get into that, I want to talk about recovery. All right. Now, this is the 2008 financial crisis. We have the big ones here, right? We have all the big ones over here. And you could see the reason I have this chart was because it was in December. It was in December of 2008 when this is where Lehman went bust in October, right over here where my mouse is. And then in December is where the Fed did QE1. This is where they started quantitative easing. And you can see that was a near-term low. We traded up. Again, we traded up for about 3 months. And then we rolled over, took out the low, and traded down significantly before finally bottoming. Some people are wondering right now, as the Fed has expanded their balance sheet by $4 trillion, started QE, is that going to be enough to go ahead and send us back to new highs? Is everything all right again? Just keep note of what happened in the past. When QE was initiated, we then rallied a while, but then went on to make new lows. Now, a little bit into the macro of what's going on over here. The World Trade Organization just went ahead and released this report, and they're saying that trade has been upended because of the virus pandemic, right? They said that they expect, and you have to be aware that always, whether it's the IMF, the World Trade Organization, their estimates are always overly optimistic. And they're saying that they're looking for world trade to fall between 13 and 32% in 2020 as the pandemic disrupts normal economic activity and life around the world. This is what's different about this crisis than the other crises where it was just economic. In this one, we have no movement. They said that the estimates of the expected recovery in 2021 are equally uncertain. They're saying they have no idea what's going to happen into 2021. It's very uncertain. The markets do not like uncertainty. Now, the unavoidable declines in trade and output will have a painful consequence for households and businesses, on top of the human suffering caused by the disease itself. And it could actually be worse. The economic fallout could be much worse than the virus itself, right? So, do you think with the uncertainty going forward through 2021 that we have bottomed here in the markets? I don't think so. I personally do not think so. I think that we're going to retest these lows. I think we're going to take out these lows, right? Right now, as prices coming up, right? Watch what happens. This support over here at 2628, start trading below that again, and you could turn again bearish in near term. Obviously, right now, things are quite bullish. There's a couple of things that I want to check out with you right now. But if we get up into this area, this hot zone, I'm calling it. If we get up into the hot zone, everyone at that point is going to be turning really bullish. That's the area to watch for a reversal. I want to look at the decline over here. The decline so far has been, let's check it out, from the top to the bottom. And the reason I bring this up, let's see, we've had about a 35% decline from the high to the bottom. Now, in a recession, equity markets could decline on average between 40 and 50%. And in a depression, 80%. All right, just be aware. Just be aware. Listen, I really wanted to share with you one of the most important things on my mind right now, and that's whether or not we're actually going to see a V-shaped recovery, if we're going to have a recovery at all, or there's a lot more uncertainty ahead. Uncertainty through 2021, unavoidable situations, taking a look at what happened in the past to give us some type of roadmap from what to expect now. Here we are. I look forward to continuing to navigate this with you. Thanks everyone for watching. I'll talk to you soon.